Hey guys, it's Brett here with Numbers Up Finance. We're going to do a short market wrap for today. That's Wednesday, April 10th. So try to stick with me till the end here so you can get a whole spiel on the short and long-term outlooks. First thing we're going to be looking at is the hourly chart for SPY and see how we've been trading the past 2 weeks. Obviously the bulls are still sitting behind the wheel here. Yesterday we had a pretty flat day. But you see today we had a little bit of growth. Our biggest spike is probably around 2 o'clock here. We see this pretty big wick on the red candle. There was actually an FOMC meeting today, which can always cause some volatility. There was nothing special though, no big surprises from Powell. The majority of the board agreed that interest rates won't be touched the rest of the trading year, at least. This can mean a couple of things. So no rate hikes led to no price change today, but if they are calling for no hikes the rest of the year, that means their data is indicating very, very, very moderate growth, or perhaps none at all the rest of the year. The Fed has been very adaptive with their strategy recently, so only time will tell how they play with the interest rates in the future. But definitely something to keep an eye on and be aware of when those meetings are. Those are definitely important and have led to a lot of market volatility in the past. I'm going to switch over to the daily charts here. Let's see. We see our little green candle here today for April 10th. We're looking at what looks like could be a topping pattern with some price consolidation here around 288 on SPY. We've got a rising wedge pattern starting to form too. If I want to highlight that for you real quick. Mouse is acting funny. A little bit of a rising wedge pattern there, if you could follow that. The MACD divergences are no longer in play with the growth we've seen here in the past week. But it's not like the MACD is making a new outrageous high, so realistically this could just be a continuation of the divergence in the future. If this does sell off and we see a little leg down here. So technically, in a very technical sense, if you want to be specific, yes, this divergence failed, but the overextension is still pretty obvious there at hand. So I think a bearish outlook in the long term is still pretty credible. But nothing's 100% in the market, and obviously that's indicated here with a failed divergence. But maybe there's a tiny case for the bulls here, but again, there's not too much room to grow any further upwards. I might just take it to the weekly chart next. So over to the weekly chart, we see our momentum is still pretty bearish. We continue to make lower and lower highs on the MACD. So that still makes out the long-term bearish case. And even though our prices are still increasing, we're seeing a little bit more consolidation. Here we are more than halfway through the week and still a pretty flat candle here on the weekly chart. Again, I don't see any signs really that strongly support either case for the near short term here. We've been trading at incredibly low volume. Hasn't been any buy-ins or sell-offs that we can really step in on. So for the near term, I'd expect probably some sideways trading, or if there's growth or selling in any manner, it'd be pretty moderate. So I guess we're just going to be sitting on our hands here, waiting for that impulsive move that's really going to act as an indicator here for where our market's going to move in the future. So hope you guys like this analysis. Hope you found it helpful. If you did, leave a like, comment, subscribe. That really helps us out. And tune in tomorrow for another daily analysis. Get your numbers up.